High win percentage trading. That is what we're going to get into in this video. I made a couple videos about this. In this video, using the whiteboard, we're going to get quite detail, covering why to do it, covering psychology, the features of a high win rate versus high risk reward system, and then how to improve entry model for a higher win rate, specifically with my system and psychology around this. So let's start off with the big why. Like, why do we want to trade a high win rate? And there's many ways to trade profitably. You can trade profitably with a low win rate, high reward. You can trade profitably with a high win rate, low risk reward. It's possible to have both, high frequency, low frequency. I'm defining high win rate as anything over or greater than 50%. Maybe 60, 75% would be a very high win rate. So why do we want a high win rate? Okay, I would say trading is supposed to improve your life, right? Trading is supposed to improve your life. And what does a high win rate do for you? It's more consistent income. It allows you to depend on trading on any given week or month. It is less stressful, right? You're also going to have less euphoria, less emotional swings, right? That seems like a good deal to me. Having traded low win rate, high risk reward, it's not consistent, it's not reliable on a weekly or maybe even a monthly level. It's stressful. Even when you win, it causes swings, euphoria, greed, and so on, and certain problems. So I'm at a point where it limits losses. Say it limits expenses. I want a low expense trading business. I don't want to spend that much on losers. I want to have consistent income every week. I want to have consistent income every month. And this is what my goal is going into April. So that's why none of these goals is to make the maximum amount of money. It's to make enough money. So if you want to make the maximum amount of money, low win rate, high risk reward might be what it is. That's what I was doing or thought I was doing the last month or the last year. Like, go for these 50 RR, these 100 RR monster trades that happen once in a blue moon. Well, I would rather make money every week. That's important to me. So, and not only make money every week, but like not have very many losers every week. Not wake up to many losers. So, before we go into the psychology, in this order, next I'm going to talk about the features of a high win rate versus a high risk reward, because you can trade the same system, one with a high risk reward, one with a high win rate, and they might give you similar yearly returns, but one is a more jagged fashion, one is smoother. From there, we're going to talk about necessary psychology to trade high win rate, and then we're going to go into my own system, what is a high probability trade versus a low probability trade, and then we're going to go into some chart examples, especially from the last month. So let's get into it. So the next thing we're looking at here is high win rate versus high risk reward. Okay. Trading the same entry model or the same triggers, so you can have one and the other. So high win rate would have a wide stop that might be outside of the level. High risk reward would have a narrow stop, tight stop, inside. And either of these can be correct depending on what your goal is. A tight stop might give you the higher RR might give you a greater a greater return over the long run. But if the goal is not return, but it's to have a high win percentage, for the sake of having a high win percentage, having a wide stop outside is going to keep you in more trades, right? Stay in more trades. It's going to be fewer losses is what's going to happen. Okay, now entry. So for a high win rate, we want to get in the trade. How do we do that? Would be if we're entering on a retracement, it's a nearer retracement. It might also be a market order just to get in the trade. High RR, we go for best possible entry on retracement far away. Now I want to stay away from market entries, but a solution here is enter nearest retracement, because if you have the best possible retracement, you have a high win risk reward, but we have a low chance of getting filled. So we're just going to miss out on winning trades because of this, right? Tight stop, stopped out more. You know, of course, if you have a really far retracement entry with a tight stop and it gets filled, it's amazing, right? It gets really high risk reward, and that could be profitable. But if we're just trying to limit our losses, stay in the trade, we want a higher percentage of entering. We could also consider stop market entry. Higher percentage of entering, but this needs to go with the really wide stop. So that's another way. Like, we can use a stop market or market, but that stop needs to be really wide for a high win rate. Now another one is near TP and far TP. So a far TP is going to give us big winners, but might not reach TP. Near TP is more closed winners. Obviously, you take the same entry. These are going to be smaller trades, but you're going to win more. Depends what you want. So another one would be partial TP versus adding on winners. And I've done a lot of adding on winners, but again, my goal going into April is consistent. There's lots of ways to get in trades. There's lots of trades. Adding on winners, winner turns into loser sometimes. Really, I'm just taking the same system, but I'm tweaking it. I've skewed for high RR, but I just want to win trades and limit my losses right now. Partial TP is winners stay winners. And from a trading model, there's the one more thing, which would be advancing stop. Into profit, guaranteeing a winner. And the other would be leaving stop. Now there's a fine line here, because I don't just want to choke off every winning trade. But advancing stop locks into a winner. And leaving stop, once again, a winner can turn into a loser. So here's things we can do to have a high win rate in the exact same trading model, taking essentially the same trades, acting on the same triggers, trading the same asset with the same similar size, whatever it is. High win rate, wide stops, enter near a retracement, or maybe a stop market entry with wide stops. Take profit near, take partial profits, advance stop into profit. Now, if we want a high RR but a low win rate, tight stop, best entering on a best possible retracement, we might not get filled, aiming for really far take profit, adding on to our winners as they move towards that take profit, and leaving our stops where they are. Now, again, it's possible to be profitable with either of these, but I'm really interested in having a high win rate right now. If I can, say, take 10 trades a month and I win 60% of them, so I would say I win 6, I lose 4, and I have a 1.5 RR, I would be happy with that right now. Like, I'm not, my goals have changed. I'm interested in just survival, and that's okay. Like, I have more to lose than I have to gain, basically. Like, I have a lot to lose and not that much to gain from being wealthy, right? I want to keep my freedom as long as I can. Like, more money doesn't gain me more freedom. So if I can make money every month. Now we're going to go into psychology, then we're going to go into, those are things once you have a trigger that can improve your win percentage. But I want to go into what things to improve the trade so that you have a higher percentage before you put on the trade, whether it's high win rate or high risk reward based on more confluence or just having a better setup and so on. But first, psychology, because I noticed there's psychological blocks. So I would say one of the first ones is, let's see, I'm gonna green and red. One is being okay with something small and saying, hey, this is good enough. I don't really like where the trade is going, and I'm going to do something about it. I'm going to just end the trade, claim it. Versus waiting for more. So this is also basically essentially greed is the problem here, where, okay, well, it's ran in my favor, but I want more. Like, I want it to keep running in my favor, and I want more. So greed. The other side of greed is like being satisfied. Like, okay, I got my 2R. I'm satisfied. There will be more trades. I'm gonna claim this as a winner, move on. So, greed is a demon to battle here, where greed will make you try to focus on risk reward, tighten your stop, aim for a bigger target, hold when the market's telling you it's going to reverse, and greed is to be fought, and satisfaction is on the other. What we want, like, I want to be satisfied that this is good enough. Now, also very important here is saying no to trades and just not taking trades. This is a psychological thing. We could also say, like, not feeling compelled to trade. Another similar is waiting for something really good. This would be maybe trading every day And it's possible to trade every day and be high win rate, but it just makes it harder. Trading often, feeling the need to trade, impatience, impulsiveness, yeah. And when I look back to last year in my profitable months, like I was a beginner, I didn't know much. Did get lucky, but something I did do well was I would often say, none of these trades fit my criteria, I'm not going to do anything. And in my early profitability, there was at times would be days, if not a week or weeks, where I'm like, there's no trade here. There's no high probability trade. And I traded over 60% in one of those months. On the other hand, in my unprofitability, I've taken more trades, I've traded more often, I've had more trading days, and yeah, so I need to, one, get back to being like, oh, nice, I'm happy that the trade's a winner, let me keep it a winner, and I don't like this, I'm not going to trade it. It's not good enough, I'm not going to trade it. It's maybe tradable, it's not high probability enough, I'm not going to trade it. So, that is psychology. I'm going to add something that's related though, is you can know if something's high probability versus low probability by having backtesting data. You can collect data on certain criteria and say, hey, this is a greater odd of happening than not happening, right? Like you can go back through price history and say, hey, when this happens, something tends to happen after. It doesn't always, but that gives you trust and confidence in knowing that, hey, this is high probability, relatively high probability. That's the proof. Okay, now let's get into higher probability trades, which is however you trade it, like stronger signals, accurate signals. So we'll call it signals. High probability signals. Okay? A signal that is going to give you good odds that something is going to happen. From there, you go on and put on your high win rate model of wide stop market, or shallow retracement. With a near take profit, maybe partial advanced stop, choke off your winners, wait for another trade. High probability signals. So I'm going to specifically talk about my system. So my system, the main signal I'm trading is a high time frame sweep. Price, what is a sweep? Is price going outside prior level and coming back in. So this is my basic signal, but I can make it better. So the price action for that might look like we have a high right here, and then price, maybe this is yesterday's high. Price comes, it takes us out and comes back under. That's a signal for reversal, right? It doesn't always work out that way, but that is my signal, and my trading model is based upon that. So how do we make this higher probability? Okay, so Um, there's two things we're looking at: confirmation and confluence, right? I want both. So, in terms of confirmation, I want to close, and I want it to happen on higher time frames. And that's essentially what it is. And my trading model is basically, as far as entry trigger, the setups are looking at more things. The entry model is looking at almost only that, a sweep. Now, I'm also interested in diagonal trend lines, and that's something that can improve the win rate by being aware that we're near a trend line that might break, or a trend line just broke. So maybe we shouldn't counter trade or whatever. There's also the signal of price holding a breakout, which we're going to get into. So this is also another entry trigger. This happens much less often, usually only a couple times a month. And on a higher time frame, it doesn't look like a break, it just looks like a reversal. And that would be, say we have this is maybe on the weekly, and we got rejected here 3 times in the weekly. And the week closes like this, or the day closes like this right here. That's a long signal. So I have two signals that I trade. I prefer to trade reverse, but that's a way to add on or open a trade when there's an established trend. Right as a breakout has just sort of closed, high time frame. So trading without confirmation, let's go back to this example here, where yesterday's high, price comes up. So not having confirmation would look like we're already short. It just came up to the high. We already short right here. It also might look like, well, I'm just going to guess it's going to reverse in this box, this fair value gap. I'm just going to go short right there. That's lack of confirmation. Also, not very much confirmation would be price just sort of wicks under here. There's a 5-minute that closes under here. That's not great confirmation. Confirmation would be the day closes here. Or it could be we move a certain percentage and leave a gap and start filling those gaps. Or maybe there's a low here or wherever, we take out that low. Here's confirmation, and particularly what I'm interested in is daily close. Now, how that daily looks is important. So, also weekly close, but I want, if we have a level over here, and I'm looking to short a sweep after it happens, and we have green candles coming up, right? Like a close over this, that's a breakout, right? Now, what if we close just right inside it and we just barely wicked over? Well, this isn't great confirmation because it looks like it could keep going. The sellers didn't really step in, which just barely closed under. It's not really that good a signal. It's the signal, but it's not that good a signal. What would be a better signal would be the previous day's green comes up to this. We have a big green candle or a couple big green candles, maybe, right? And then this candle wicks over and is red and closes significantly under. This is a much better signal. That is more confirmation because we have a red in the other way. At this point, is this really a reversal trade? Are you guessing it's reversing? Or you have confirmation that it already started to reverse, right? A move to the upside at this point would now be a reversal, right? So that's something that I'm looking for on my system is I want the candle to change colors and have a big wick. It doesn't have to, Oftentimes, the more important one, it should be one or the other. It should either have a big wick or change colors, right? Because it could also be something like this, where it has a small wick, but it's a big down closed candle, and it took that high. That's also acceptable, but I want one or the other. Also, if the week closes like this, that's also good, because a weekly signal is stronger. So that's the first thing, is confirmation. I want to have more confirmation, and I'm going to wait for a daily close or something close to a daily close, and I want the candle to look a certain way. And if it doesn't, I'm going to say no trade. Now, confluence is a big thing, and there's different ways to look at confluence. One way people study confluence is they want a number of indicators to tell them. Me, since I'm only trading off of one indicator, and that's price action and a sweep, what gives me confluence is multiple time frames and multiple related assets. So let's look at a couple examples of this. So say I'm trading Bitcoin. Confluence for Bitcoin is, okay, we got our daily sweep, and we have some kind of confirmation. Now I also want weekly. We had a weekly sweep at the same time or before in the same direction. And then what would also be nice is having a monthly sweep. What would also be nice is multiple sweeps, right? Versus sweeping in opposite directions or just one time. Daily sweep, weekly sweep, monthly sweep, multiple sweeps. What else? So I'm not going to get into trend lines too much, but yeah, you could say a broken trend line would also be a signal. Oh, that's sort of a different signal that I use, actually. But yeah, using confluence of both of those at the same time could be. Daily sweep, weekly sweep, monthly sweep, multiple sweeps. I would also like to see Bitcoin dominance also swept. So Bitcoin, if I'm looking for a long on Bitcoin, not only did the Bitcoin daily sweep the low, but the Bitcoin weekly swept the low, and the Bitcoin monthly swept the low, and the daily swept the low multiple times, and Bitcoin dominance is sweeping the low, and ETH sweeps the low in the same direction, and DXY sweeps in the opposite direction, because those are the most uncorrelated assets. Okay, what would be not a lot of confluence would be, this is confluence, okay, versus conflicting. So let's look at this. This would be confluence. This would be conflicting. Would be the daily swept the lows, the weekly swept the highs, the monthly swept the lows. We're alternating sweeps. We didn't have consecutive sweeps. Alternating daily sweeps. Maybe Bitcoin dominance moved in the other direction. ETH is on the other direction on the daily. DXY is correlated. So this is a way for me to say no trade. Like, I want everything, not everything needs to line up. DXY is probably the least important, but I want everything to sort of line up, right? That gives more confluence that it's not just some random price action, but the market is getting ready to move in a direction, right? So we also have the euro. The euro is also daily, weekly, monthly, but I also want to see all Forex pairs sweeping. That to me is confluence. That it's not just this one, but it's something happening with the dollar. It's a move across the market. So this is a way to use Confluence to improve the entry model, in my case. And I think whatever you're doing, like having your lower time frame align with your higher time frame, and maybe multiple assets behaving in a similar way, this can really improve the win rate. So I'm looking for a daily sweep in same direction as a weekly sweep and same direction as a monthly sweep. I'm looking for multiple sweeps in the daily. I'm looking for Bitcoin dominance sweeping in the same direction. I'm looking for ETH sweeping on the same day and the same week, and DXY moving in the opposite direction. That's a high probability trade. From there I can go and I can use either a shallow retracement or a stop market order to have high odds of getting in the trade. I can trade with a wide stop loss, so I don't need to be so precise, and I can trade with a nearer TP, and I can take maybe partial profits or advance my stop as the trade moves in my favor to limit my losses, reduce my losses, and create a high win rate. So what I've been doing is just going in the chart, trying to find something. It doesn't matter if it's all like finding something that sort of fits my narrative for finding a trade, because I want to trade, because I want action, because I'm a gambling addict, or I've been acting like one, and then tight stop, holding for big profit, not advancing my stop, letting it just come back and stop me out. So no more of that. And I do feel confident. I've been pretty effective at modifying my behavior, not only over my life, but over the past month on trading, that I'll probably be able to do this. So now I'm going to go over some examples. And where I'm going to start is there was a couple of trade opportunities in the past month, end of February and start of March. So let us go into it. So the first one, okay, we have our first move, we have our second move. So this was mid-February, end of March, where we went on this parabolic run up, right? Bitcoin is not only sweeping this old high, but there was a high over here that it swept. And then it reacted strongly, and then there was a one day where it swept. And there was also a diagonal from here like this that was forming. So on this, up here, we had our confluence. First off, we had let's go to confirmation that we had a good trade here. We had a big red wick reversal candle. Close on daily and weekly. We also had ETH sweeps same day. We also have weekly and daily sweep. We also have multiple sweeps. We also, something I'm not adding here, but I should have added for high probabilities, we have a good liquidity, we have a couple good liquidity targets here. That always helps, is having good targets. Good targets. Now, price did move all the way down here, and something that would have made that possible, because we got conflicting signals that came in afterwards, where we sweeping on the daily, the lows, and also, by the way, I believe at this time we had a DXY breakout, or DXY sweeping the lows. So this is a high probability trade to get in here, and at that point we can enter with a stop market, we can enter with a shallow retracement, we can use a wide stop, and we can advance our stop into profit as it moves in our favor, and or choke it off early, depending on what happens. But this was a high probability trade that came in February. So let's continue on. there was several more. Okay. So price does end up breaking down. And it breaks down. Now here's the big trade of March. Okay. So first level of confirmation was daily sweep, BTC and ETH, same day. Okay. We also had a huge wick on this candle. On this daily candle was a huge wick. We also had a signal on DXY. We still had a strong monthly candle. And we had a major TP. And then we had a diagonal overhead. So this is a high probability trade, which could have been a high risk reward trade too, where we had this. Now, on Sunday, the weekly closed like this. Now, for increased confirmation, we have more confirmation now that the weekly is giving a strong signal. As a reverse color, it turned green. It has a huge wick and has a held breakout. So here's also a high probability long. It's just entering right here. It feels late, but it's not really because after the weekly closes. So that could have been the add-on. In this case, there was no conflicting signal. There was no short signal. So it wouldn't have been unreasonable to hold to new highs. So there's another series of high probability trades in the month. So there aren't necessarily that many of these, but they do happen consistently. Now, price comes up here, and it leaves a big wick sweeping this high, but what it doesn't do is it doesn't sweep the previous day, which makes it not a good long. But what ends up happening up here, right up here, okay, confirmation and confluence, we swept weekly high, we swept daily multiple times. We have ETH also sweeps high, and ETH also sweeps the weekly same day multiple times. We also have big wicks. We have reverse color. So there was a high probability short to take in here as well. It didn't end up moving that far, but it would qualify as high probability. Now there's also a high probability long where price came down, and here's the low, weekly low. It sweeps the weekly low and comes back in. And our confirmation and confluence is we have a big wick. This happens across ETH, BTC, and indices. And DXY is doing the opposite. And we have, it's happening on the weekly, and it's happening on the daily. And it's happened twice now because it actually, there was a little low right here that it swept twice. So it swept that level twice. So we went from here and we went back to the highs. So this is what I'm looking for right now is I want to see a sweep happen, but I want that sweep to change colors or have a big wick. One or the other. Possibly both is best. I want it to sweep a weekly level. I want it to sweep a daily level multiple times. I want ETH and BTC to also be sweeping at the same time. And maybe the dollar is doing the opposite. And maybe we're breaking out of a trend line too. But and we have closes. All those things, now I have a high probability signal and I can go in and I can set a near retracement, shallow retracement, and or a break. I'm going to use a wide stop. I'm going to, and then I'm going to take profit when it's time to take profit. I'm going to exit when it's time to exit. I'm not going to take conflicting trades. So for instance, in this range right now, I noticed on the day, okay, so we have this range that's formed. We swept it once, we swept it twice, we swept it 3 times. Bitcoin swept the low of the day, right? No, hang on. Okay. So where are we with Bitcoin right now? Bitcoin swept the weekly high and then swept a daily low. Which signal do we go off of? Now at the same time, we have ETH, which looks a little bit similar. But ETH swept the weekly low and swept a daily high. Now also, neither of these candles, no reverse color, not a huge wick. So if I'm just going off the daily signal where I'm saying, hey, well Bitcoin swept the low, so we go long. Well, hey, ETH swept the high, so we go short. I'm just going to trade both of these. They're both low probability, and I should trade neither. And I'm okay with trading neither because I'm just getting all mixed signals. Why should I trade that if I'm trying to be high win rate, right? And if I'm trying to make money and avoid losses and avoid losing unless I have to. This is not a good, it's not a good, there's no confluence here. There's no confirmation here. So all I can do is wait, and I can wait for something better, which I'm confident there will be. If we are to look at this month and how many trades there were, there was a couple shorts in here. There was actually maybe a long here and a short here, and then there was a breakdown short here, and then there was a long here and there was a breakout here, and then we had a short at the high, and then we had a low long at the lows, and then we had a short at the high and long at the lows. 4, 5, 6, 7, 8, 9. We had like 10 good high probability trades. All 10 of these could have been winners. And it's possible that it could have been like 80% win rate and had reasonable risk reward as well. Like, that's possible. So that's my goal moving forward for April is trade a high win rate, pick up few losers, win most of my trades, and that's going to mean saying, hey, I'm okay with this. I'm happy to either take profit, exit, advance my stop. I'm going to pay attention to the high time frame. I'm going to follow this process as best as I can. And I'm going to be okay not taking trades. preparing myself to not trade so much, do more back testing, do more other activities. It's a departure from what I've been doing. It's using the same system and looking at the charts in the same way, but it is a slightly different system, and this is what I need. I can't keep doing what I've been doing in the same way. It's not going to work for me. It hasn't been working for me. And if I go back to what made me profitable, I think the biggest thing was just saying no to a lot of lower probability trades. So yeah, I hope you found this video useful, and that's the game plan moving forward. High win rate, and okay, psychologically easily satisfied, and not needing to trade, and willing to be patient, not wanting to avoid losses. Waiting for confirmation and confluence on my entry model, and once I'm entering on a shallow retracement or a stop market with wide stops and near TP, advance my stop, take a piece off, exit when I'm told to exit, and pay attention to high time frame signs of reversal. That's the game plan. So much love, appreciate you, and I look forward to trading in April. Peace.